Hi, everyone, and welcome to this episode of Money Moves. For this episode, I want to talk about the long-term perspective of the S&P 500 and generally the overall outlook for the market because we've seen some short-term volatility, at least in the QQQs. So I'll talk about the historical returns for the S&P 500, and then I will talk about the logarithmic chart for the S&P 500, which is something people don't really talk about very much. And then I will also talk about a little bit of short-term price action in the S&Ps as well as the Qs. Then I will go over each of my investing accounts, starting with Worthy Bonds, GroundFloor, Fundrise, my retirement account, my M1 account, and then I will finish up my investments with my portfolios with Robinhood as well as Tastyworks. Then I will go over my biweekly tracker. Of course, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 8-bed, 8-bath mansion in Williamsburg, Virginia, definitely like and subscribe. This house makes me think business in the front and party in the back, so it's kind of like a mullet house, and it definitely needs a redesign. Why does it have so much wood paneling? It's currently on sale for $1.75 million. Welcome to the Portfolio Bulletin. Let's get started. With the markets as choppy as they have been, it's definitely worth taking a look at what the historical averages are for the S&P 500, which generally relate to the overall stock market. The S&P 500 started in 1926 with only 90 stocks, and since then, it's averaged around 10 to 11% every single year on average. In 1957, they adopted the 500 stock model, and through the current time, they've averaged around 8%. Looking at the historical averages here, you can see back in 1957, it averaged over 30%. Again, in 1975, over 30%. But in 1973, it was minus 17%. 1974, minus 29%. So there are some pretty big ups and downs, but right after, there's usually pretty strong recoveries. We had some very strong years here in 1995 and 1997, followed by the 2002 crash, as well as the 2008 crash, which represents one of the largest drops in history, over 38%. It's worth mentioning here that 10% is not adjusted for inflation. With the inflation adjustment, it's only around 7%, which is still pretty strong growth. They do a comparison here to the average price of goods, or CPI. You can see here in 1997, we had some pretty high inflation and a pretty choppy stock market during that period also. 2008 consumer index went down along with the stock market, so it's not directly correlated. Then they talk a little bit about timing the market. They say that investors that buy during the lows and hold their investment or sell on market highs will experience larger returns than those who buy at market highs. So just keep that in mind when you see the market dipping. Generally, it's a time to buy, especially if we've seen a pretty strong pullback off of recent highs like we did in March of last year. But the main thing here is that you do not sell on the dips. Looking at price history here, you can see we had some pretty dramatic price dips from 2000 all the way to 2003, retouching those highs again in 2007, financial crisis here in 2008 and 9, and then it's been basically straight up since then. It's easy to say you should have sold somewhere around 2000 and bought back in 2002, but you never really know exactly when that's going to be. So if you are a long-term investor, just continue to buy as this price action goes down, and it's likely that we will see higher prices in the future. Moving on to some price action here, this is the monthly chart for the S&P 500, and this is actually on a logarithmic scale, which is why it looks quite a bit different than the other charts. And you can see we've been in this bullish pattern all the way since 1933. It was a little choppy here just after the turn of the century, had a big bull run into the roaring 20s. Great Depression started. We had some lows in here at around 8.7 for the S&Ps. And since then, we've rallied all the way up to 3,974, which is all-time highs. And you can see we've maintained this channel all throughout that period, despite 2008 crash, which you can see here, dot-com bubble here, which really just put us back into the main channel between these two lines here. We broke back down below that channel here in the 1970s, which is what established this lower trend line from the previous lows here in 1942. And since then, we've rallied all the way back. Anytime we get above this higher trend line, same way we did back here, we tend to retrace, came right back up here and tested it again in 2007. And then there's a fair chance we could have broken above it if we didn't have the financial crisis. Since then, we've recovered back into this middle channel. Zooming in here, you can see this channel continues to hold even in the dip of March 2020. We did touch that channel briefly and then continued upwards. But the main takeaway here is looking at recent price action here. We did finally break out of this channel just barely. If we hold this through the end of the month, it does seem like we will break into this higher channel and that we won't see resistance here for quite a while. If we do break out of this, it seems likely to me that we could encounter this upper trend line here, which would project a potential price of almost 6,000 for the S&Ps. If we do see a rally up to anywhere near that price, that does seem like a potential all-time high to where we would potentially see a retracement at least back into this central channel, which could indicate a long-term top. Obviously, this looks very different on the regular chart. This is SPY. On the weekly chart, going back to the 2008 crisis, and you can see we've been in this long bull channel, and we are right at the top of that channel, which indicates to me that there could be some retracement price action. And you can see what I mean here. We're getting capped out by that longer term trend line. All of these trends are starting to coincide here, and the channel itself is starting to pinch. You can see these two lines here getting a little bit closer together. And once these two come together, it seems to me like we will get a breakout to the upside, which would then put us over that longer term channel that I mentioned previously, potentially representing a long-term top. Quickly taking a look at the QQQs all the way back to 2002, you can see we established this trend line here between 2003 up to 2007, and we stayed well below that line all the way up until 2018, where we broke up above, rejected all the way back down to this lower trend line here, which was established here in 2011, which continues to be a strong level of support. You can see we retested it here in 2018 as well as 2020. Since then, we've broken out of this channel, which we've been running in all the way since 2009, which is that bull market that the S&Ps have also been in. And then we had this bull flag where we broke out of this channel that we've been running in since 2020. Broke out of that channel, made new highs, got rejected, and we've since been downtrending, at least in the short term here over the past month. And it seems fairly clear that the Qs are overbought, far more than the S&Ps are right now. And this is the weekly chart, so it could take a while for us to get back into this channel to where the Qs are going to be in a buying opportunity again. I still think we'll see some chop in here and potentially some support from this upper trend line. But I don't think anything above this trend line is really going to be sustainable, at least in the short term. The Qs haven't been able to support themselves outside of here for quite a while. And if this line does not support the Qs up here, then we would see a pretty substantial dip all the way down to somewhere around 250 or 260, which would represent around a 20% drop from current prices. But remember, the long-term takeaway is that the markets tend to go up even when we see retracements. Continue to buy on the dips and don't sell at the lows. As Warren Buffett always says, buy when others are fearful and sell when others are exuberant. Even when we have our big negative years of down over 37%, we come right back up 27% and up almost 15% the year right after. Moving on to my investing accounts, I continue to keep this right at $8,000 of contributed money, and I continue to withdraw this money every single day. You can see I have $1 here because I did withdraw this yesterday, but I don't want to hold any more worthy bonds, as I do want to limit my contributions to bonds as a whole. Unfortunately, I think Worthy is still sold out. I know they're working on a Worthy Community 2, which will be another $50 million worth of bonds that will be available to the public. They've already sold 150 million bonds. As you can see, there are three funds here, each at 50 million. But definitely open your account if you don't have one already, if you want to get in on this. That way you're ready to buy the bonds when they become available. Moving on to GroundFloor, I actually had my first payback. You can see I got 94 cents back. And it was a $30 note that was paid back. And it was only a couple of months, which is why I only got 94 cents. But it's cool to see that the system is working. Kind of annoying they don't allow you to invest down to the cent. I think you have to invest in $10 increments, which is unfortunate. So I guess this will sit here until it gets rounded up to the next $10. But that's okay for now. You can see my portfolio here is all the way up to $3,140 as I continue to move some money over from Lending Club. Total invested dollars. Total expected earnings here is $222. Not sure where that 94 cents came from since my earnings were 79 cents, but I'll take the extra capital, however they figured it out. I continue to invest only in C and D notes with the higher interest rates that are available. A and B notes are not really valuable to me as they don't yield quite enough money. And I expect in the long term that the higher interest rate notes will pay out more, even if there's a little bit more risk. I do want to mention here that it seems like they've been announcing more notes than they have in the past. And there are quite a few here, and I'm still not investing in all of them. As I mentioned, you can see this B note here at only 7%, another at 7.5%. You can see I didn't even do this 9.5 here. Plus these short-term notes here, close to 5 months, will get reinvested at a little bit quicker rate. And I'm not sure if it's true, but I just have the perception that these shorter notes seem to be a little bit less risky to me. I don't know if that's true, and we'll see if it holds up. But for now, that's my plan. Moving on to Fundrise, you can see I had a pretty big jump here on March 24th. And that's because I invested in their internal IPO. I did make a video on that, and if you're curious, you can definitely check that out. Unfortunately, this is not a public IPO. It's an internal offering to Fundrise investors. And I believe you had to have over $1,000 with Fundrise at the time to be eligible. So it wasn't even available to all investors when it was announced. But still check out that video if you want to see the growth of Fundrise over time. In terms of my goals here, you can see they continue to update this platform. They still think that I'm off track of my goals. My midpoint is still $501,000 with my target of $500,000 by 2040. I still expect to make this goal. And by that time also, I think Fundrise will be acquired by another company or potentially go public. Going into portfolio here, you can see my total amount here is almost up to $34,000. And my Fundrise IPO is just over $8,000. And looking at my individual purchases here, I did buy almost $4,000 more in this last offering here just a few days ago. This brings me up to 900 total shares. And that stimulus money was pretty well timed because this was completely Biden bucks. So taking a look at my retirement account, you can see my money did move over into my new allocation with over 43% in the S fund and over 41% in the C fund, which is the total stock market fund as well as the S&Ps respectively. Currently 10% in government-backed bonds and 5% in the total bond market index. And currently I have no money in international stocks because this I fund seems to be pretty choppy, and I prefer to stay in American-based indices for this account. Moving over to my contributions, you can see I'm only putting 5% into the G fund and 50% into the S fund. So my contributions into the S fund should grow my overall percentage in the S fund. But overall, this is a very long-term portfolio, of course, because I can't touch it until I'm fully retired. And I want this to grow as fast as possible over the long term, which I think the stock market is the best place to do that over the next 30 years. Moving on to my M1 portfolio, I did actually contribute a little bit of money to this week for the first time in quite a while. And you can see I have a cash balance here pending to reinvest here on Monday. Over the past month, we're still sitting at all-time highs, which is good to see. Of course, some of this is contributions here in the last couple of days, but it's still continuing to grow. Almost $20 in the last month in dividends and almost $1,000 in market growth, which is pretty aggressive. Looking at the funds, everything is up as the market continues to be at all-time highs, at least for the S&P 500. You can see I have a little marker here for a purchase in tech. The company that I decided to add to this portfolio is actually IBM. IBM kind of has a weird story, and this will probably be something I cover in a future video, but this is a good dividend payer, and I think they do have some potential long-term growth, at least in the quantum computing sector of the tech market. Otherwise, looking at activity here, you can see all of my dividends that continue to get paid. So I contributed $300 last week, $100 here and $200 here. And then I added around $15 just to reinvest some dividends. I didn't really plan for this to work out this way. I wanted this money to go into IBM, but you have to do it manually. Otherwise, it will just disperse the money however it does based on the algorithm and whatever percentages that you put in. So this money is directly allocated to buy one share of IBM as the stock is sitting right around $135 per share. Looking at my higher yield savings account, I basically haven't done anything with this for quite a long time. I don't want to own any more bonds, as I mentioned before, and I've reduced all of my bond funds to way overweight. So you can see bank balance sheet, overweight, midterm bonds, overweight, this other bond fund that I built, overweight, and then my long-term corporate debt is basically at weight, and this is just because corporate debt is going down. You can see it's down almost 3% in the last month. So corporate debt is continuing to go down pretty aggressively. Most of the bonds that I hold in here, just to take a look, you can see I do own some ATM-free bonds, which means these are tax exempt, usually municipal bonds, similar to what I have here with a different set of municipal bonds. Again, these are tax exempt bonds, which is pretty cool, but again, they don't make a ton of money. You can see the yield is only 2%. Pretty cheap expense ratio, which is nice. They're not going to grow a whole lot, and they just pay out a solid dividend. Otherwise, all the ETFs continue to go up. You can see the high yield dividend did outperform pretty strongly, along with the dividend growth fund down here at 7%, and VIG pretty close, just under 7%. What was even more surprising here is that Realty Income is performing quite well. It does make sense that REITs are up a little bit with the threat of inflation coming, and real estate tends to hold their value pretty well. Moving on to my Robinhood account, you can see it has been very choppy over the past 3 months, down over 1.5%. Previous highs were February 20th, and this is pretty indicative of what the QQQs are doing right now, as I trade mostly growth stocks in this portfolio. If you want a more in-depth understanding of my options portfolio, I do a video on this. I do an options video every other week that I'm not doing this, usually around the 7th and 21st of each month. But stocks worth mentioning in here that I think are getting pretty cheap. We got Snapchat down at around $50, AMD back down to $75, and DraftKings almost down to $60 per share. You can see it's currently at $63 per share. All of those companies, I think, have a long-term thesis of growth, and you can see they've been growing very steadily for quite a while, and they've just kind of decreased off of those all-time highs back to this previous up-channeling trend. My Tastyworks portfolio has done a little bit better, currently up $1,600 in my taxable account, down a little bit in my IRA. That's because I trade some bigger names in here. Costco has done very well, Lululemon's doing well, Simon Property, Microsoft, Apple, even the Qs are doing pretty well because this is an iron condor. Again, if you want a bigger breakdown of this, check out my video next weekend. Every weekend that I'm not making this video, I make a video on my overall options portfolio. Moving on to my biweekly tracker, you can see stocks kind of hanging out in this all-time high period, similar to my trading accounts, generally flat over the last few months. As the market continues to stagnate a little bit, REITs continue to uptrend, and bonds are uptrending a little bit just because I have contributed some of my lending club money into GroundFloor. Cash down a little bit, which is good, means I'm finally investing a little bit more money. And lending club continues to drift off into infinity here. Overall, up only 0.5% over the past 2 weeks. This is not a perfect indicator of exactly where I'm at because my shares in Fundrise are not actually included in any of these investments. I do consider them separate. They are kind of stock, but they're not publicly traded. So it's kind of like an angel invest, and I don't actually include it in stock the way that I include these public shares. So all of that money is not included in. So in reality, this number is a little bit bigger, but I don't like to include that in this tracker. So let me know what you think down in the comments section of the current trend of the markets. Do you think growth is going to recover? Are we going to see a little bit of a retrace in the S&P 500? Or should we just continue to buy into infinity and stop trying to time the market at all? As I mentioned, if you like any of those platforms, definitely use the link in the description. Definitely helps me out and supports the channel, and I really appreciate it. If you got any value out of this video, definitely like and subscribe. I would like to make this a more full-time gig and produce more content for you guys, so definitely subscribing and telling your friends really helps out the channel. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. It's been a while since I've talked about Mark Rebier. He makes music on the spot, and he's very talented. He also has his own pretty unique style for how he does things. So I'll play a little clip from this, and if you want to watch the full video, it will be linked in the description.
Moderna, I got the vaccine up inside my Pfizer Moderna, I got the vaccine up inside my got that vaccine up inside my life. I got that vaccine and I'm feeling just right. Got the vaccine in my mouth. I got the vaccine up inside my Pfizer Moderna, I got the vaccine. Got that motherfucking vaccine. Moderna, I got the vaccine up inside my Pfizer Moderna, up inside my Pfizer Moderna, I got the vaccine up inside my Pfizer Moderna, I got the vaccine up inside my Pfizer Moderna. I got the vaccine. I got that motherfucking flu. Come on, baby, got the vaccine. I said I got the vaccine. Yeah.
Clearly, he has its own style. Let me know down in the comment section what you think of it. Again, if you want to watch the full video, it is linked down below. Make sure you hit the bell so you catch all my future videos. Thanks for watching and have a great day.